The price of gold is dropping in a sudden sell-off today, with some traders dumping metals to cover losses in equities, while silver and copper also took a hit. So for more, let's bring in Bart Melek, Managing Director and Global Head of Commodity Strategy at TD Securities. It's good to have you joining us. Thank you.
Well, great to be here.
So given what we're seeing just this afternoon, I'm wondering, like, the volatility we've seen so far this year when it comes to the precious metals, you expecting that to continue probably for most of this year?
I think, unfortunately, volatility will be a fact of life here for the foreseeable future. And of course, the issue is very broad. One big issue is, of course, we're not quite sure what U.S. data will come out as. The other day, we've had employment numbers that were stronger than expected today in inflation. And at the same time, we're seeing the Chinese nation basically going off for their New Year celebrations. And that means maybe less liquidity in this market. And we're not quite sure whether there is a lot of appetite for the so-called debasement trade for now. We've had gold, go to record highs along with silver. There have been significant corrections. We've been back again. And now, well, we're not sure if interest rates are going to go down. We're not sure if there's going to be continued appetite from Asia for these precious metals as a hedge.
You're also projecting gold will average about $5,000 an ounce in the first half of 2026. Like you just mentioned, a whole number of factors here that's influencing gold. Is there one in particular that is making you think gold's going to just average around 5,000 for a while, or is it everything combined?
Well, I do think that 5,000, our quarterly average for next quarter, in fact, is still a pretty robust price by historical standards. What I think will get us there is the fact that after Mr. Powell leaves office, we are going to get a Fed chair who's going to be a little bit more predisposed to lowering rates, particularly on the short end of the curve. But the reason we don't have it shooting massively higher, like many and some in the market have, is because we're not all that sure that he is ready to sacrifice inflation or allow higher inflation at the altar of incremental marginal growth in employment and the economy. So I think there's a lot of uncertainty. Once we have the new chair in place in May, we'll see what he thinks is appropriate for the market. But at this point, not so sure that we're going to see anything happen on the monetary front. And as far as retail demand, I think at this point you might see some profit taking. There wasn't a lot of enthusiasm for speculative traders at this point. So I think this market is trying to consolidate its recent gains.
Let's turn to silver now, because you mentioned recent volatility in silver was driven by a gamma squeeze. Can you explain what that is?
Well, that's something that I think has ended for now. But what we've seen is a lot of enthusiasm, particularly on the retail side for silver. And we fundamentally like silver a lot. This is a market that's going to stay in a deficit for quite a long time. But what we've seen not that long ago, is retail investors going very, very aggressively into the options market and buying call options on publicly traded funds. And the result of that is that market makers, folks that issue a lot of those funds, had to stay so-called, delta neutral. They didn't necessarily want to take directional risk, and they went into the market that was already fraught with illiquidity and inventory issues, and had to buy physical to hedge against that risk. So they were short on the option side, so they went long physical to balance things up, and that, I think, caused a squeeze. Got very aggressive 2x, 3x leveraged funds in there. And then we had some bad news as far as the market was on the precious concern, is President Trump told us that he is looking at Kevin Warsh as the new Fed chair, who, as I said, is more of a hawk on the inflation side, and it's not all that clear that he will put metal to the pedal on interest rates.
Just in our last minute here before we have to wrap up, I'm wondering, we could get some clarity on tariffs later this year in the summer, maybe. How would that affect the price of copper, of silver, of gold? Do you think that would affect, how would that affect it?
Well, certainly that is something that we're all talking about in the metals trading community. And if we get some sort of resolution in June when these tariffs are maybe postponed for another time, where it's decided that it's not accretive for the United States, I think a lot of the inventory builds we've seen in the U.S. for a lot of these critical metals, copper being one of them that has seen a lot of inventories, silver another one, could reverse course, and we could have loosening up of the market in quite a material way. So reversing a lot of those constraints that have propelled it to record levels.
Okay, that's all the time we have. Bart Melek, appreciate you joining us today. Thanks so much for your insight.
It was my pleasure. Thank you.